Lots of people joining.
What are we talking about today, Christina?
So today we're talking about why educating your client is
Uh-oh, I got mute.
so lots of obviously I'm a advocate for educating, hence why I do these classes. But it's really comes to me also down to educating our clients. And I will kind of explain why. This might actually be a short meeting. I was originally thinking this one when we had 30 minutes, so it might be short, and I'll give you some of your time back depending on what kind of questions we get. So today is why educating your client is vital. Next week is it's going to be talking about reaching out to your current clients now about OEP. So there's lots of reasons to do that. You kind of got to get ahead of the curve and stuff. So we'll talk about those very specific things. And then September 28th, I'm going to talk about renewals. And I have my assistant extraordinaire is going to be part of the guest speaker. I want you to hear it from her side. So I don't know how I did it. I had 900 individual ACA clients. I think I did that for 3 years in a row where I'd have it 900. And I also would get new people, lose some, gain some, usually because of Medicare. And I want you to just see where I was when I decided now I need an administrator, and then what she does it, and how every year we're trying to get better and better, more efficient. Now, again, this is the way I do it. My way is not the only way. I think it's pretty good. But it's my way of doing it because that's just who I am. That's how I built my agency. You figure out how to do it your way that will work. And that's what I'm hoping is that you take some of this and you glean it and you go, all right, I see what she's saying and why she's doing it. So I'm going to do it this way for it works for you. But I want you to think about some of the future stuff. There were so many things that I wish I had known or at least been aware of as my book of business grew. And so we'll talk about that on the 28th. And then, like I said, the second half will be from the assistant who kind of came in. And honestly, I don't know what I want you to do. I have no idea. I just know I need help because it was right before open enrollment and trying to figure things out. We were building an agency. There was a lot of chaos in my life at that time. So she's going to give you her perspective. And now this will be her 4th open enrollment. So she's got lots of experience on that. In October, I'm going to talk about HSA. So that's my first October 5th. I want to make sure you guys understand HSAs, what those mean, when those are appropriate, when it's probably not appropriate, some of the government rulings on those. I recently learned something new from somebody in the marketplace. I was like, oh, great. I love learning the new stuff. And I'm going to share that. And then October 12th, 19th, and 26th. So that's the last 3 before open enrollment. And then I'm sorry, there's no classes. We can pick it up again in January if there is a consensus for that. But those 3 spots are kind of open. If there's something that you're like, this is the one thing I need, or this will help me, let me know, because I don't want to just share stuff that I think is important if I'm missing what you guys think is important. So I have 3 things left to talk about that's open as of right now. So that's kind of the rundown. So today, again, probably relatively short, I'm going to talk about why educating your clients is vital and kind of the process of how I came to educating people, because I know there's lots of agents who don't. I know the no-call agents are out there. I don't agree with that because I don't think you're educating your client. I think that's why they have turnover. I think that's why they get tricked. So that's partly where this class came from. So my thought process is when I first started, I came into the marketplace in 2013 and I knew this much about health insurance. I mean, I really didn't know anything. I know how to run an office. That's actually what I was hired. I came in to run the office and I love learning. I love finding new things, and the Affordable Care Act was this new thing. And we had heard everything from local news to massive news to social media. Everybody had an opinion about this Obamacare that was coming. And I didn't really have an opinion. I was like, I don't know, something to do with insurance. And I don't know, it doesn't seem like such a bad thing. I lived in Wisconsin, and Wisconsin's rules for their own insurance in the state of Wisconsin was not affected as much as some. So I know in California, it affected a lot of people because they could buy insurance. Single males could buy an insurance that was never going to cover a baby, never going to cover pregnancy, never women's things. So their stuff was pretty small. when they were younger. Ironically, as you get older, men's insurance gets more expensive because men don't get their annuals. They hold out, they suck it out. They're like, nah, I'll live through the pain. And then they end up in the emergency room with a massive heart attack. And they actually cost more money on the back end. So the front end, men typically cost less. On the back end, men cost more. So I was like, this whole thing was interesting to me. And it was something I knew nothing about and I love to learn. So I was getting these clients coming in. And I had two ladies I worked for. One sold Medicare and one sold the marketplace. And the marketplace person she had done group insurance for many years. She was so excited about the Affordable Care Act. Like, she was at Congress when they passed it. That's how excited she was. And then she spent the next 4 years, because remember, it was passed in 2010. And it took 4 years. They gave the insurance companies and the states and everything 4 years to figure out what they were going to do. And she was absorbing anything she could find. There wasn't a lot of stuff out there until it went live. I think a lot of places were like, they're gonna appeal this. It's not gonna actually go through. And I think only until recently, there's still been kind of that attitude. I think that's why you can't find a lot of education. You can't find a lot of training. A lot of FMOs that are like, hands off. You can't make any money off of this, because they kept waiting for it to change, for it to be canceled, to be completely overhauled. Well, 10 years later, I think it's now, all right, it's here. The marketplace, the Affordable Care Act is here to stay. It will get tweaked. It's going to get worked on. They're going to add regulations. They're going to change things, some good, some bad, but it's here to stay. So I researched, did a lot of stuff, and I watched a woman come into our office who was self-employed. She owns a little shop actually just across the street from me. Had not had health insurance in years because she was a small self-employed business owner, and thought, all right, I'm going to come here. I'm going to see what this is. I hear it's affordable now. And our state governor and legislation was very anti this. So there was not a lot of news out there. There wasn't a lot of education. They were very anti anything to do with Obama. And so they came to us for education. And she came in, and I was just administrator. Here's the paperwork, fill out the paperwork, but I would sit and I would listen to the agent talk to her. And the woman went, okay, here's my income, right? She didn't make much, very small, self-employed. Most of her stuff goes back into the business and then enough to live off. And the lady went, all right, I think it was like $130. You know what? I can do that. So she got it. I was like, all right. Cool. And then somebody else who came in who had not had health insurance in 20 years because he couldn't pass the underwriting. He was born with a tumor on his brain, non-cancerous, when he was a baby. They removed it. He'd been fine ever since. This man was now in his 50s and had not had health insurance because he was a self-employed person, and no insurance carrier would take him because of something that happened when he was an infant. First time he could get insurance in many years. I'm like, all right, this is kind of interesting. And then people are complaining about the penalty. And I'm like, well, what's the penalty? So I researched that, right? So back then the penalty still exists, but the cost of the penalty is zero, was that you would have to pay money to the federal government if you did not have insurance. Now there's more nuances to that, but that's the general gist of it. If you didn't have health insurance, a qualified health insurance plan, you had to pay the government for that. So I got those people, right? They were very angry. And I would go, let me run a quote for you really quick. Let me just see what it'll cost you. Well, you could pay the fine, but I can get you insurance for $2. Wait, what? I'm like, it's a tax credit. And the tax credit, you're self-employed. You take every tax credit you possibly can get, correct? Well, yeah. Well, that's all this is. Oh, okay. So I started educating people that Obamacare wasn't a thing. That was something the media called it. It was the Affordable Care Act. And the tax credit isn't a handout, because we got a lot of proud people who run around like they think of it as Medicaid for whatever reason. And they didn't want to be, I don't need a handout. Well, this isn't a handout. This is a tax credit. You take every tax credit you can get. Yep. All right, let's just do that. And then there was some weird things, penalties and fees and all this stuff. Well, now remember, I have an agent that's a Medicare agent that I'm also learning from. Most of the complaining of things that were done for the Affordable Care Act is actually on Medicare. They get a penalty if they don't buy health insurance, right? They get a penalty if they don't buy a drug plan. And 10 years from now, because they don't need any medication, they're 65, they're healthy, they're like, I don't need to buy a drug plan. Then they hit 85 and now they need to have heart meds and stuff. And then they come in and they haven't had a drug plan for 20 years. Do they get penalized? And does that penalty go away? For the rest of their life, they have to pay a penalty. At least on the Affordable Care Act, it was a 1-year penalty. You didn't get penalized for the rest of your year. So a lot of the stuff, I was like, everybody's all angry, but this is actually Medicare. Why are people so angry? I really didn't understand it. I mean, I get the whole, I don't want government in my stuff, but I'm like, it's because there was a mass enrollment into the marketplace. It was something new. It was this mass thing. And so I think everybody was aware of it at once. Medicare, you're not aware, right? Until you turn 65 or you're 85 and suddenly you find out there was a penalty. So a lot of the complaints I realized were coming from Medicare. So I did a little bit of both sides. I eventually got my license and I was selling and I was running quotes. And the more I did it, the more I'm like, I don't understand the problem here. I guess if you don't want insurance, you don't want insurance. But if you go, it's going to cost you a whole lot of money. And I would educate people. I did not let them walk in here and go, I don't want that damn Obamacare. And I would go, really? First of all, Obamacare is not a thing. Did you know that? Wait, what? That's just a nickname. Second of all, do you want your tax credit? Well, yeah. Well, if you have 4 kids, do you feel bad for the person who only has 2 kids? Do you only take tax credit for 2 of your kids because, well, other people don't get the same amount of tax credit? Of course not, right? You're like, give me it. Do you get mad at the person who's got 10 kids and they get 10 kids worth of tax credit? No, you're like, wow, God bless them. They're crazy. They got 10 kids. And they go, oh, okay. So then we would educate them on that. And then as the tax credits got bigger and that max out of pocket got bigger and paying stuff back, I'm like, oh, I got to tell my people, right? Don't go over this cliff. We had the cliff, which is supposed to come back for 2025. Be aware of the income cliff. That'll be all in the news next year. Not exactly looking forward to it because it's going to be a bunch of blah, 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 blah. And no, just tell me what Congress is going to do about it. But the income cliff, you could not get a tax credit if your income was over 400% of the federal poverty level. It was not prorated. You either got a tax credit or you didn't. The IRS did not care that you went over the 400% by $1. Literally $1. Didn't matter. You either got the tax credit or you did not. Well, if you went over by $1 and suddenly you had to pay $800 of tax credit per month back, that was a pretty big ouch. And then it was 2018, I believe, there was a lot of changes that happened. One of the changes, I think it was in 2017, is that Donald Trump came in and he did 2 things. One, he got rid of the penalty. So he made the penalty 0. All right, so there's still technically a penalty if you don't have health insurance, but the cost doesn't cost you anything. We didn't have hardly anybody leave. I mean, most people don't have health insurance so that they don't get taxed. Most people have health insurance so that they have something in case something happens. So we didn't have, people were all upset, oh, it'd be a mass exodus. I didn't really see that. Again, I only know my own personal agency's experience. And the second thing that he did was in the middle of the year, when the Affordable Care Act was created, the government said, all right, insurance carriers, you are no longer allowed to have a cap. No more $1 million of benefit and then not paying anymore. It doesn't matter if somebody costs $10 million, you have to keep paying it. So the insurance carriers are like, wait a minute, you're telling us that we can't put a cap anymore. How are you going to protect us? Okay, yeah, we're getting some premiums, but those are really expensive people. The government said, all right, we will offset the cost on the back end of those expensive high claims. So the insurance companies, after the year, and it usually takes about 1.5 years for them to get all the claims, they would submit to the federal government the expensive people, the over $1 million people. And in theory, they were supposed to get reimbursed. They didn't the first year, and they didn't the second year because they were still doing I don't know what. There was 26, I believe, it's either 23 or 26 co-ops that started with the Affordable Care Act based on that promise. But then they didn't get it. That's the bad part. They didn't get that money. They had to actually take the federal court to the court. It took 3.5 years for them to get it, but unfortunately, there's only 4 co-ops left in the country because they collapsed. They were getting that worked out. Well, then President Trump came in and said, as of this moment, he did it like, I think September or October. It was like kind of in the middle of the year. He said, we are no longer doing that. We are no longer going to pay you on the back end. Well, the insurance companies were still bound by the rules of the Affordable Care Act. So it went a little crazy. The insurance carriers were struggling. I remember Molina, they basically kind of threatened Congress. They're like, we're going to pull out of all these states if you don't fix this. Like, we can't afford that. And I get it, right? And it didn't get fixed. And there were some carriers that went under. Molina backed off. They're in like 26 states. They backed off to a very few states. And the insurance carrier in my area, my experience was the rates went up 60% in 1 year. The carrier, and mine are all not almost all, every single one of my carriers, especially at that time, are all nonprofits, and they're truly nonprofits. They went to the state with their rate increase, and the state said, that's not enough. You have to go up. If you have 37 heart transplants, that's 37 million right there, just like that. You can't close your doors. So they raised their rate 60% based on what the state told them. And this kind of happened across the board. Well, in the year before, if you made 400% of the federal poverty level, you didn't even get a tax credit. The rates were already less than 10% of your income for majority of people. In 2018, that was no longer the case. I think it was 64,000 was the income limit for a family of two. If you made 64,000, you got a tax credit. If you made 65, you did not. What the heck? The rate just went from costing you $1 to costing you $2,000 a month because you just made $1,000 more. Crazy. I mean, it was absolutely insane. So I had to educate my clients on this. They come in going, I think we're going to make 63,000. I'm like, all right, under no circumstances can you go over 64,572 or whatever it was. And if you even think you're going to go over, you need to call me. And I did. I had a few people in like March. We have a new job thing, a new situation, and we try and figure them out. I put more people in HSAs those years than ever because HSA, once you are retired, is the only thing you can write off. You can't do your retirement funds because you're retired. You can't contribute once you're retired. HSAs was the only thing I could do to get somebody. So if they made 67, I was like, how do you feel about an HSA? Explain to them what an HSA was. I had to tell people, I had to learn about it. You know, how much could they contribute to make sure that they would be just under that cliff? So that's where the education came. I only had one person that went over the income cliff. Only one. And it was because of him. He owned it. He emptied his 401k to buy a truck. I said, I hope you like that truck. Because now he had a family of two. They were in their 60s. They had to pay back over $1,000 a month. Actually, I think it was close to $2,000 a month times 12 back to the government. So I hope his truck, he loved his truck. I'm like, dude, you should have just gotten a loan. It would have been a whole lot cheaper. But he didn't blame me. I educated him. And I think that was when some of these things that you as an agent deal with is what's happening was one, that cliff or the fee of not having insurance. And then the cliff, you hear people talk about paying back a penalty. They're not paying a penalty. They just didn't qualify. Well, we don't have to deal with that this year and into 2024, but we might for 2025. So I just want you to keep an ear out. You are the expert. You are the one who needs to educate your client on what is happening, because you don't want them listening to the news. Oh my goodness, it's kind of the last thing you want them to do is listen to national news about health insurance. You really don't. You want to find out what's actually happening and then tell them. Sometimes I remember sending out a big mass email to my clients saying, it's really important. This is what's happening in Congress. And I really highly recommend that you contact your Congress people. And we actually had their names and their contact information to tell them such and such a thing. Well, next year I'm going to be doing that because of the cliff. That cliff should not come back. It really shouldn't. It's not fair that somebody who makes 73,000 gets it and somebody who makes 74 doesn't. It's not appropriate. It's not accurate and it's not fair. And you know, the world isn't always fair, but the marketplace, the idea of everybody paying roughly 8.5% or 10% of your income is a fair way of doing it. It's an even percentage across the board. You make more, you're going to pay more. You make less, you pay less. It's actually pretty fair. But to say sorry because you make $1 too much, you don't, It's not fair. So be aware of that. Start listening to that, because I know it's going to be a hot topic. It's going to come out, there's different agencies that you can be with or people that are actually at Congress, at DC. Read what they're saying. And if they're like, this is what's happening, there's a vote coming up, vote. Because I don't want to have to go back to that. If we do, all right, we do, then you get to educate your clients even more. Can you get your income below, next year? Next year's gonna be 74. So the year after, it's probably 75,000 for two. I'm gonna be like, can you get it under there? Come talk to me before you retire. Don't retire until you talk to me. If you're thinking of retiring and it's September, you'll probably pay Cobra. You need to understand that. But that's why I don't have a loss of coverage or we don't lose clients. I'm not saying never. I don't have 100%. I don't think that exists. But I don't have clients that are wish-washy. They're not going to get tricked by those commercials that you see on Facebook that are like $0 and $15,000 in benefits or something stupid, right? I've seen some of those where, the card and we're going to put 5,000 on there. Like, what? Now, I will have clients go, is this legit? Is this something I should get? Is this something I should look at? Okay, they see it and they see it over and over and over and over and over, right? After a while, you start thinking, maybe I shouldn't, maybe I'm missing something. But I want them to call me. I want them to call my office. If you start seeing those, I've actually seen some of you've put it on your Facebook page, which is great. But if you don't have, we have like 6,000 clients. We only have like 200 on our Facebook page that even like our agency. You would never guess from the people who like our agency that we have over 6,000 clients. So you have to, send out emails. Now, I don't do spam emails because I hate spam emails, but I do email my clients things that I think is important. So that would be one of them, especially if you're in Florida and Texas, right? That's where everybody's going after the clients because there's so many people and there's so many low income. If you have clients in Florida and Texas, it is worth it for you to send out an email or a text saying, I know there's lots of confusing ads that make it seem like you can get something for nothing. Please contact me. Many of those ads are misleading. Simple like that. And then they'll call you. If you have a receptionist, I always have to tell my receptionist when we're doing a blast, we do a phone blast and I'm like, okay, hold on, lady, they're coming, and give her the answers right there, right in front of it. So it's educating your clients. If you become known for that, they're not going to go somewhere else, or they're going to contact you when they see that, Now, in the past years, people used to read more. We don't read as much, right? We sit on our lovely little devices right here and we give them 13 seconds. TikToks, they just go. So those ads are meant to confuse. They're meant to grab them at that first sentence they read. So you're going to have to do the same thing. First sentence, really short. Don't give them too much detail. You'll have people who will want the details. They'll contact you. But write to the person who only wants 2 sentences. The people who want 20 will contact you. I spend more time, as we talked about last week when I was showing you how I do an appointment, and in previous ones, I spend more time on the front end with my clients. I spend an hour. Sometimes it's an hour and a half if they want to get disability insurance and cancer and all the extra stuff, if it's not open enrollment, and I can do an hour and a half. But I rarely have to do that again. They get me at the front end, so I don't have to spend so much time in the back end. I have clients that have been part of our insurance agency since 2014 that I don't think I have seen since 2014. But they go, that's my agent. They've got me. They know that we're here for them, but they're happy. They trust me. I showed them what I was doing. One person asked, they were looking at my YouTube video from last week where I showed Health Sherpa, and he went, oh, you actually show Health Sherpa. You don't just show them their options. And I go, no, I want them to see there's 132 options to choose from. And then I'm going to narrow it down for them. And I go over to the side and I click the right carriers. And I'm like, the rest of these carriers don't cover the doctors you want. Okay. And these plans, they're actually pretty horrible plans. I can show them to you if you want, but they're not really worth it. I want them to see that I'm there to educate them and narrow it down for them. Now, if I'm sending an email out going, hey, here's a quote of the 3 best, again, even in my email, I'm like, these are the 3 best based on the information you told me. If you want to look at the 132 other options, you can, but you know, this is what I do every day, and then they can see them. So don't be afraid to show them that there's a lot of info. Now, opposite side of that is make sure it's narrow. You are the expert. You need to know this much. They don't need to know that. You don't want to make them an expert in insurance, right? You don't even want to make them dangerous enough information to be dangerous, because then they start giving out bad advice. You want to go, what are the 3 most important things you need to know, right? The income, the tax credit, how that's relates. And if your income changes, your tax credit's going to change. You need to educate them on that. It's not really about the health insurance. It's educating on how the tax credit works first. Then a little bit about the health insurance. But most of them have health insurance, even if they think they know, and they may not, you know, they kind of know how insurance works. The stuff that's going to affect them is the tax credit and how this whole thing works. So that's kind of why I did it. I want them to know. And there were some massive things happening in my realm, in the insurance world, in my state, in my county. And if you do your own customer service and you start realizing you start getting the same question over and over again, that means that's something you should educate them in your appointment in that first time. Whenever I have a new agent, they handle all their customer service, because I want them to know what they're missing. I want them to know what they missed, right? So a couple of things that have come up, just tidbits for you. When I am doing a quote for a couple where like 2024, so this will happen a lot in 2024, and I pay attention, one of the couple is turning 65, run the quote as if it's only one person on the plan. Family of 2, you know, still do the family of 2, put the income correctly, but only put the person who's going to stay on the plan on there. Now, you should know Health Sherpa pretty fast, right? I can do it and they don't even know what you're doing. Get that person on there, have them pick the plan based on the cost with one person on the plan, because they're usually fine with it. And then I go, and now I got some good news. So Bob, you're going to be on this plan for 6 months before you go on Medicare, right? Guess what? You're going to get a discount for 6 months. Then I add the second person on there so they can see what will cost. And then they might go, wait, what? And I go, well, you know, you get more tax credit the older you are. And now the old person's going away. Kind of tease them about the old person, whoever that is, and your tax credit's going to change. But they're not as angry if you do it the other way, right? So you show them and they're like, oh, it's $100. And then you don't tell them that this is going to happen, or they don't remember. And you call them up and you go, oh, hey, I took Susie off. She's now on Medicare. So Bob, it's going to cost you $300. What? They kind of get angry about it. Since I started doing it the other way, where they signed up for 300, because 300 is completely affordable. And they remember that it's going to be 300. And now they just got a benefit for 6 months. So that's one of the things that I've learned to change. So we don't have to explain it over and over and over again. And the other one is, if you're ever in a weird situation, for us, it was that year when we only had one carrier for most of our state. The rates they were honestly 13 cents. Even if you're at the high end. Now this was an anomaly, but it's because the carrier, they did play the system. They had a cheap silver plan. And then their second cheapest silver plan was a couple $100 more. Well, the tax credit was based on this one way up here. So everybody was getting insurance for less than $1. If somebody's making 14,000, that's one thing. When somebody's making 60,000, that's a whole different thing. So I told every single person in my office, this isn't normal. Don't get used to this. This is a special blessing. Get used to it, because it's going to go back to normal. And they go, all right, all right. And then the second year, there was 2 years in a row that this was happening. Ha ha, 2 years, you're getting it for $1. This is not normal. So when it switches back and you're back to where it should be prepared. And I did not have anybody angry or complaining. A different agent I know didn't tell anybody that this isn't normal. And when they came back in on year 3, making $64,000, and they had to pay $300, they were all angry. Well, that's just human nature. We get used to something and we think we're spoiled. And as soon as it goes away, we get angry. I told them it wasn't a right to have it at $1. It was just a little bit of a blessing. The people that went to her felt it was a right. It was my right to have it for $1. Well, not really. So think of things like that. You have to think for your client, not just this year, but what might change next year. You are going to have people who've been paying attention to the news and know that there might be changes coming. There's an election. Every year there's an election. Somebody's going to go, is this going to go away? We've even had people that didn't want to sign up for their Medicare plan because they were worried about who the president was. And we're like, there's always those. If you are the expert who knows this much, then you can talk to them on those parts. You can say, it's okay, things will change, but I got you. I don't know what the changes are going to be, but 2024 is set in stone. You don't have to worry about it because the insurance carriers can't change outside of some of them collapsing, which we know that happened. But I think for the most part, we have a pretty stable set of insurance groups, carriers in the country. They've been around for 10 years. The one that got a little bit greedy and spread themselves a little too thin, I think many carriers have learned from that. Some of them have backed off. They're a little bit more cautious, so they're not spreading themselves too thin. But you're gonna have them. And and if that happens again, I gotcha. I'm sorry, but we will work on it. We'll figure out a plan together. If they feel that you're there on their side, you got a client for life. Even if you mess up, because it happens. We do, we're not perfect. We know this much, but we forgot about this side, right? A lot of the things I've learned is because I messed up. I had to go fix something. Somebody called me, oh, this is happening. And I'm like, ooh, my bad. Let me see. I had to figure that out. None of us are going to know it all. Be honest with your people. And this is my favorite line. When someone asks you a question that you have zero idea on, that is an amazingly good question. Thank you for asking that. I'm going to find out about that. No one's asked that before. Maybe your first client you've ever had in your life. Of course, they're the first one who's ever asked it, but I've never had somebody be upset by that. Not once. I'm like, good question. You're kind of actually complimenting them that they thought of something, right? They thought of something that you don't know. Well, now you get to go find out. Now you both know and you can share it. And if one person asks it, eventually somebody else will ask it too. So you didn't learn it for nothing. It wasn't like a complete waste of time. So I see we have some questions up here. Donna says, my tax advisor says you must count the gross amount of Social Security in the MAGI. Correct. Now your accountant should know there's no cliff. So there are still, unfortunately, a lot of tax advisors and tax accountants that have no idea how this whole thing works, but there is not a cliff, but the MAGI is the modified adjusted gross income, which is gross Social Security. I know some of you asked it. I do have an intake form I created. All I did was copy the marketplace. Have you ever pulled that whole list of all the options? That's what I did. I just pulled the list and I put it on there. So make sure you get that information ahead of time. And I say Social Security gross amount. Even though I still have it on there, I still have people who get it. Oh, I get in my bank account $300 a month. Okay, we got to add some taxes on there. But it is the gross. Robin says the subsidy essentially replaces the employer match that individuals who receive group coverage. Correct? You can say that, John says exactly, I hear all the time, that's less than I pay now. Right. It was to fill in that gap for people who did not get employer coverage. Because honestly, our health costs have gone down. And then you get these weird things. Like when Trump got rid of that and the cliff and all that. All right, that caused some weirdness. All right, we started to come back down. And then COVID happened. Everybody's, and now we didn't go to the doctor. If you didn't have COVID, now they're going to the doctor. So there's some kind of weird stuff happening. But still, overall, statistically speaking, costs have gone down, not adjusting for rate increases and, cost of living stuff, because people are going to get their annuals. Men are starting to go get their annual. They're finding out, hey, your blood pressure's up here. You're like this close to a heart attack. Ooh, maybe I should bring it down instead of waiting till they have the heart attack. So it is getting better. Arlene, are you saying that a client married with one child who makes over $100,000 can still get tax credit? Sure, if they're in the right area. It's the percentage is you will get a tax credit if the cost of the second cheapest silver plan in that county will cost you more than 8.5% of your income. So if the rate in your area is high enough, you get a tax credit. There is no cliff. I say that to people all the time. Oh, it looks like you make too much to get a tax credit because the rate's already less than 8.5% of your income. They need to hear that. 8.5, it's costing you less than 8.5 cents on the dollar. Oh, I don't get a tax credit. That's not fair. It's already, you're paying the same percentage. So I run it. I never know. We have a county up in northern Wisconsin. There's only 2 carriers. Their rates are really close to each other. It is amazing how much money people can make up there and still get a tax credit because their rates are up here. But if you go into that same area, it happened, we had these 2 carriers that way up here, but a new carrier came in and their rate was down here. Well, it screwed the people that needed those higher costing plans if they wanted their doctor. But always run it. You never know who might get a tax credit. Donna says, so when Chris shows 1, 3, 2 plans and then quickly narrows it down, how many people want to do the analytical thing to understand the 132 plans? There's always a small percentage. I will send them the link to look at them themselves. I will show them the basics. Well, what if I make this much money? That's the other one. I get that way more than somebody who wants to analyze 132 plans. Well, what if I make 5,000 more? What if I make 10,000? What if I don't make, can you give me a quote at 100,000, 50,000? And all right, I will give them 3. After that, I'm like, you really want to do this yourself? Here's my link to my Health Sherpa. Let me know what questions you have. So there are a few. And usually if somebody wants to do that, well, what about those others through? Pull up 2 and then just show them the difference and go, this is why I picked this plan and I'm not showing you this plan. It's 10 cents more for this plan and it has an ER copay. This one has nothing. Oh, okay. If you show them why that person who's a little bit analytical, I have your best interest, is 10 cents worth it? Is $2 worth it? No. Okay. They're like, oh, okay. They just want to know what your thought process is. Most of the time, those analytical people, they want to know that you're not steering them into some high expensive thing that doesn't make sense to them. That's why if you're showing them quotes, pick the worst plan, put it on there so they can go, why would anybody buy that? Exactly. Let's just take that one off. So, Arlene, when I do that on the marketplace, it shows they're not eligible. If they're not eligible, that means they make too much income and the rate is already less than 8.5% of their income. Sorry, can you explain what the gross income is? That is income before taxes come out. Yep, usually line 11 or 12. So that's the adjusted gross income. There is no line that says modified adjusted gross income. So you guys that have my YouTube channel, if you look at some of my other classes that I do for clients, and I do them, I have one that just says MAGI. It talks very much, it's less than 10 minutes, I believe, that talks about that. So I would go there, look at my YouTube channel and at this stuff, because I took basically all of these things into short sound bites for clients. What is the modified adjusted gross? What am I looking at? And I also sent it to agents and I've also sent it to accountants because there isn't the MAGI. And the cliff thing, you don't have to worry about the cliff thing until it comes back. The cliff was who qualified? There was a cliff. You qualify, you don't. Hopefully it will not come back. It really should not have ever been there, but it does happen. They don't always think about the future. Because honestly, most people that were at the 400% of federal poverty level in the first 4 years didn't get a tax credit because the rate was already less. It wasn't until Trump came in and took that back end that they had to raise the rates for everybody. Ironically, we actually ended up costing everybody more money, the taxpayers, by taking the only individual claims, right? The insurance carriers were only doing individual claims for those high claim people. But instead of that, they ended up doing a tax credit for everybody to balance out. So, by the way, the 400%, I just saw what you were saying, Martin. There is something to know about the 400% that does still exist. So you do see people that will say, is there a cap at how much tax credit they have to pay back? Yes, but only if their income is below 400% of the federal poverty level. So I personally don't tell them that, because most of the people who have to worry about paying tax credit is making more than 400% of the federal poverty level. And if you make more than 400% of the federal poverty level, you have to pay it all back. It is not prorated. There's not a cap, but there is one. And if you're interested, I have thought about showing that. It would probably be something I would do in January with a guest speaker who's really into it. I love it. He talks about it and I'm like, oh, this is fascinating. Most of my clients, I'm just not gonna, I just tell them, if you go over, you're gonna pay the difference back. But if they're over 400, because that's the people that, you know, they told you they make 40,000 and suddenly they're making 70. Well, you're a single person, you're way over the tax credit limit, you're gonna, or the 400% of the federal poverty level, you have to pay it all back. David, did you say previously that there's no penalty if you went over what, if you overmake less than what's reported? I think you're just saying if there's opposite. So there is no penalty, period. Take that word out of your vocabulary. Take it out of your client's vocabulary. It's not a penalty. There's no penalty for making too much or too little. There's no penalty for having insurance or not having insurance. There is no penalty. Now, if the government says, you told us you made 30,000 and you actually made 20, all right. Oh, did you pay some premiums? You probably shouldn't have paid the premium. Here's that money back. And if you say, what's the cliff this year? 13,590, right? A single person has to make 13,590 to be above the Medicaid, non-expanded states. And so you say, all right, they're going to make 14,000. And then when they file their taxes, they made 10,000. The IRS doesn't care. They don't care. They're certainly not going to make the person who makes 10,000 pay back their tax credit when they don't make the one who makes 14,000. At 14,000, they're already paying the full tax credit amount. They don't care. There is no penalty for not making enough money. Now, there's no penalty for making too much money either. Okay, that's why I want you to get that vocabulary, that term out of your vocabulary. It's not a penalty. They just have to pay back what wasn't theirs. They basically got a loan. And the government's like, hey, we just loaned you a bunch of money that you didn't qualify for. So could you give it back to us? They're paying the tax credit ahead of time on what you say your income is. At 30,000, you make 60. Of course, the IRS is going to want their money back. And everybody goes, yeah, yeah. If they didn't, I would put everybody at 100% above federal poverty level. We'd all have amazing CSR plans for $1, right? Now, you do sometimes have to mess with the numbers. If somebody says, I don't know what I'm going to make. I have dairy farmers. They don't know what the milk is day to day. All right, what's your best year? What's the year like, wow, everything was perfect. I made 60,000. What's the worst year? 20. Okay, this is how I do it. I go, all right, if I put you at 60,000, you're going to be in a plan with a $9,100 max out of pocket. You're going to pay a lot. But that's not going to be helpful if this is the year that you were going to only make 20. So at 60,000, again, these are just example numbers, but at 60,000, the insurance that's the best for you is going to cost you $600 a month. Can you do that? And they're like, I can do that. Sure, I can do that. All right, I'm going to report your income at 20,000 so that you get that good CSR, you get the better plan. But I'm going to take the tax credit of 60 so that you pay $600 a month. If you make somewhere in the middle, you're going to get money back. If you make 60,000, the IRS is like, thank you, even Steven, we're good to go. The insurance carrier is not going to look at their tax credit. But if they made 20,000, they're going to get all that back. And they didn't screw them by putting them in a $9,000 deductible plan that they're never going to, be able to afford because they only made 20,000. So there's no way you're going to ever get penalized for making less. They're not penalizing them now. They're giving them the money. You're not going to get penalized for making more. You just have to pay it back. Donna said, okay, so no interest, but is there interest on the amount? There is not interest. There's no penalty. There's no fee. There's no interest rate. The government says you owe us $100. You pay us $100. That's it. They're not penalizing you for underestimating either. So it was an accountant who kind of taught me some of those tricks, and I was like, all right, it's your money. We'll see this out. There's no interest. You're not going to pay more. Now, if somebody walks in your office and goes, I don't know, 50, 55, quote them at 55, right? Hey, if you make 50, you'll get some money back. It's not a big deal. Most people are not going to be like, oh, I need that $5. If somebody's going to collect Social Security, but in the middle of the year, like they're one of those people who that's really what they're going to live off of. Well, what can you afford right now? You don't have Social Security yet. What can you afford right now? I'll put a little lower income so they can afford their insurance for the first 6 months. And then it's at 6 months, I go in and up it so that they're paying a little bit more now that they're getting income. You can change the application as many times as you need to. Once you hit submit and you're like, oh man, I did something wrong, just do it again. Whatever you just did will override by the new thing you do. I had a person tell me, I'm pretty sure it was 6 times in 3 weeks, job changes. I updated her application. Oh, changed it. Update it. It doesn't send red flags. It's a giant automated system of millions of people. You can update it as many times as you need. If you update it incorrectly, just go in there and fix it. Now, during open enrollment, you might want to wait about 10 minutes sometimes or do it the next day, because we have seen somewhere that it gets crossed, but just redo it. If it's not looking accurate, redo it. You're not going to hurt anything. Lori, if they make less than the minimum, is there any way they can get ACA instead of Medicaid? Not at the moment if you list their income as less. I give them the benefit of the doubt. You have no idea what somebody's going to make. You honestly don't. They could have the same job for 40 years and lose it. Is it possible you could make 15,000? Sure. All right, I'm going to put 15. The system is not smart enough yet. They proposed it. It's another thing I'm hoping they'll fix. It was one of the things that got dropped when they were, Congress. They give you a list this big and they narrow it down to this. And that was one of the things that got dropped. So at this time, the system cannot do that. If you say they make 10,000 and they were denied Medicaid, it's going to say you can buy insurance for the whole cost. But if you tell them they made 15,000, it will let them have it. And then the IRS is the one who reconciles. Martin, in that 60,000 best year example, but you get a plan based on 20, you just don't accept the full tax credit. Correct. When you are ready to enroll, you find the plan that you want, and this is on Health Sherpa, healthcare.gov is a little bit different, but still really similar. There's a button that says, do you want to take all the tax credit? It's just automatically checked. You uncheck that, and then you put in the amount they want. So at the 60,000, let's just say the tax credit was 1,000, and at 20 it was 1,200 or whatever. I would say I don't want 1,200. I only want 1,000. That's how you do that. So that's Jill. That's what I'm talking about. I do 2 quotes, and then whatever the $60,000 or whatever the higher quote is, I write that dollar amount, that tax credit. And then after you fill out the application at the lower amount, you pick the plan. There's a spot that says, do you want to take the whole tax credit? You unclick that and then write in the amount you want. And then they just pay. And the insurance carriers don't care. They get a packet from healthcare.gov that says, this is the person and this is what they're paying. It doesn't tell them what their tax credit is. It doesn't tell them, none of that. They get a packet from the government that says, here's the person, here's how much they need to pay, and here's the plan. I mean, I have people that are in CSRs, but paying the full cost because they really didn't know what was going to happen. They were hoping to sell a business, but if they didn't sell their business, they were going to be at 30,000 or 20. It was like, it was a whole small business that barely made any money. But if they sold the business, they were going to be above the tax credit. So they kind of split it in the middle. I've never had the carriers come back and go, why is this person in a CSR but paying $600 for that? They don't care. from the government. The insurance carriers have to do what the government sends to them. Rosalind, so when you're processing a dairy farmers app in the example, are you entering that they make 20,000? Correct. I'm saying estimated household income is 20,000 or whatever it's picked. And then click, I don't want to use all my tax credits. So Catherine, I used your suggestion to report lower income to get the CSR, but actually took less of the tax credit to match their expected MAGI. You knew the client was close to the CSR. Thank you for your suggestion. You're welcome. I don't know about you, but if my difference of my insurance is $1,500 max out of pocket or $3,000, and I'm really only over by $100, I would appreciate if my agent told me that. I would report $100 less so I could be in the better CSR. And again, this is part of my classes that I have. It's my favorite class of all the ones I created at my websites for classes, is just understanding those CSRs. So Marilyn, I will have you rewatch this video. I don't know where we're at as far as time wise, but just go in about 40 minutes and then you'll be able to see it because I'll explain it. Somebody's asking, how long does the average commission take? The average commission depends. So during open enrollment, you're going to sign people up in November for January. You're not going to get paid till February. So you are typically a month behind and it's the end of the month. I have a carrier who pays us on the 30th. So we get January's commissions, February 28th. We get February's commissions, March 31st. So it's typically a month behind. At the beginning of the year, it can be more because you're enrolling people in November and December for January, but the insurance carriers are not going to pay you ahead, which is good because then you don't have chargebacks. So, I mean, that's the good side is you're not going to have a chargeback. You don't have chargebacks from ACA. They don't pay you if they haven't been paid. The other side, though, is the marketplace can take a bit. So now you're getting February, you finally get paid in February. Well, that also means in January of the next year, you're getting paid for December's. So once you get that first month, you know, then it's pretty consistent. And then as you add people every month, you're going to get a little bit more and a little bit more. It is a little strange if you are getting paid $20 per member per month. So if you're doing some math, that's a person that walks into your place and they sign up for a plan is worth $240. But you don't get $240 until you've had them for 12 months, right? So ACA is not like Medicaid or Advantage plans where you kind of get this lump sum at the beginning. You're going to get it every month. But now you have that person who's 240, and then you add another person at 240, and you add another person at 240. So it's accumulative. It's going to grow and grow and grow. And I can tell you, when I had 900 individuals at 240 average, just running the math, that's $216,000. Now, I'm not suggesting anybody should have 900 individual clients by themselves. So you can certainly do that if you want. I know I like to call them fun, crazy agents who do that kind of stuff. Got one, I swear she has 6,000 individuals herself. She's a little, I don't even know. I think she gets up at the crack of dawn and works till, midnight. You can make money with the Affordable Care Act, but you're not going to make money in the front end. This is a long haul. This is accumulative. The nice thing, though, is ACA can take 30 days, sometimes 60. That can happen. If you're getting paid directly from the carrier, 30. If it has to go through an FMO, sometimes that can take 60, particularly at the beginning because they're trying to figure everything out and it's kind of messy. After that first one, though, it should be pretty much consistently a month after the plan goes into effect. But the ancillaries usually pay you right away. So if you sell a short term, you're going to get paid right away. If you sell accidents, critical illness, dental, that's going to be right away. You're not going to wait. Those are pretty quick. What about people who only have Social Security? They still have to file. It says they technically don't file their taxes, right? They do. You tell them you get to file your taxes and your government's going to go, you don't know anything, but you do enter their Social Security into the application and they just have to file. And I'm like, isn't that great? You get to file and tell them, I don't know you anything, neener. Like, they have to file. So you do, even if they're only living off Social Security and they won't actually have to pay taxes, they'll still file. Lynette, federal poverty level for 2024 individual, yep, 14,580, and family is before is 30. It's actually the largest jump I've seen. It's a pretty big jump. I will tell you a little bit of our logic. So next year it's 14,580. When somebody comes in and they're in that low income and they're not sure what they're going to make, I don't put them right at the 100% of federal poverty level. We actually look, so this year it's between 13,590 and 20,000. Okay, that's where the low CSR is. That's the 100 to 150% of federal poverty level. We put them up higher at 15, so that when some of those people will let it auto renew, which is not what you want them to do, but if it auto renews and I only have them at 14,000, it's going to kick them to Medicaid. And some of them, I already know they're not going to qualify for Medicaid. So I estimate a little bit higher. I will say 15,000. Next year, we'll probably be saying 16, 17 to make sure that as renewals happen, their income is. But this was a pretty big jump. Mary, I need help figuring out which gap plans to offer. Pick one. Just find one. I like United Healthcare because they're in every state and they have every option. Now they have a lot of options. So I think Bobby Joe was on here earlier. I'm not sure if she's on here today. I do have different carriers who like to pop in on my classes. But reach out to your United Healthcare. They get paid to tell you what's the best plan. Same with Gen's Allstate. It's going to take me years to stop calling them National General, but Allstate, they're in most states. Those are the easiest because it's one carrier who's got lots of options. So just learn one carrier and then start learning some others. Don't overwhelm yourself with too much information and too many plans to decide. Just pick one. And it definitely depends on the state. I mean, I can tell you the one I like the most. I got two agents who are like, why do you like that one, Chris? Well, because I'm old and I came when there was a cliff and I had to put people in HSAs and the gap policy was the only one that worked well. So it doesn't always work well. So find the one that speaks to you. Don't try and sell one that you think makes no sense. Well, if it doesn't make sense to you, it's not going to make sense to them. You know, a couple of weeks ago, I talked about the in-pocket plan, the guaranteed issues. So if you want a refresher on those guaranteed issues, go look at that video. And remember, all of those guaranteed have identical underwritten ones that will be cheaper if they can pass health. So, you know, kind of showing you that. The dairy farmer. Okay. So you did 20,000 income to get the better coverage plan for them, which might have been $100 a month premium with a full subsidy at 20,000. But you're choosing to only use portion of the full subsidy and pay $600 a month. Oh, you just answered my question. Pick the plan, uncheck the box, and put in the amount. Correct. 6 weeks to for waiting for your income. Remember, they paid January, you may not get paid till the end of February. So if they paid for August, you should get paid this month. So reach up your upline, talk to people and go, when is this coming? To avoid Medicaid, you have to have higher income. If your income is below 100% of the federal poverty level or below the Medicaid expanded states, it's going to put you in there. Now, I do not know anything about the Medicaid expanded states. I don't know why people care so much not to be on Medicaid, but if you say the income is higher than what the Medicaid is, it's not going to put you on Medicaid. Sharon says UHC advances, paid advances in Maryland and Virginia in October for January 1st. Chargebacked all accounts that picked a different company. So companies do chargebacks. I don't take advances. So I mean, if that's your option with the marketplace, I would say don't do it. Too many people move, change plans last minute. I wouldn't take the chargebacks.
Hey, Chris, I don't mean to interrupt you. We didn't have a choice as far as the advances were concerned.
Okay.
They just did it. So
yeah, that's interesting. So
yeah, because I don't take advances from anyone.
Yeah.
But that's what they did across the board. We complained to high heaven in Maryland. We don't know if they're going to change it for this year, but that's what they did last year. So yeah, they do chargebacks.
2 state exchange states, right?
Yeah, well, Maryland is a state exchange, but Virginia is FFM this year. They did it in both states.
Okay. So
So I
yeah,
don't know if it's regional or if they did it
must be
nationwide,
regional.
but yeah, they
What's
did
that?
that to us over here.
And that's where those chargebacks come. And that's why most carriers don't do it. People can change their mind all the way to December 31st. So if you have the option, opt out. Otherwise, be prepared. Don't spend it till you know it's there. So Rosalind said, I think a Social Security problem is proving to the IRS where their income is coming from. You ask them for their Social Security document. They all have it. They get it every year in the fall. They'll say, here's, you know, where's that Social Security document? Almost everybody keeps them because it came from Social Security and they want to hold it. And I actually like to see the document because then I can see the dollar amount. And often people are incorrect. The Social Security amount that they sent you was incorrect. So this is a little bit how the system works, and we're almost at the top of the hour. The system does look at the Social Security, whatever that says Bob makes $1,200 a month. And if you put in Bob makes $1,000 a month, it's going to say, send us proof of that income. And then you're like, hey, Bob, I need a proof of your Social Security. Can you get me that letter? And they bring in the letter and it says 1,200. And you go, Bob, I got to update. Looks like you're making 1,200. You go in there, you redo the application. I don't even send that letter. I redo the application saying they're making $1,200 a month. Magically, the request for proof of Social Security goes away. Because the system's like, hey, you're matching what we learned, what the Social Security says. If the system was smart, it would just autofill it. You'd say, Bob gets Social Security. It would go, yep, it does. Here's how much. But the system isn't smart. So that's where the Social Security, ask them for that letter because they get it in the fall. When you're doing renewals right now and stuff for 2024, somebody says Social Security. All right, when you get that letter, can I see it? Especially if it says send us proof of Social Security. Looking to see what is the federal poverty level come in, the 400. It's kind of irrelevant, Arlene. The document, the 400 really doesn't matter. So don't worry about it. If they get a tax credit, they get a tax credit. I will never not quote somebody based on where if they're at the higher income. Catherine, I saw another ACA webinar and it was mentioning hackers are taking clients. Do you have any advice on how to avoid the hackers other than the consent form? I had a similar case, call the marketplace 3 ways. Just so you know, don't call the marketplace. They can't help you. As you're saying, they couldn't prevent them. Correct. The system is antiquated. It's 1998 technology. It cannot stop it. Unfortunately, there's really no way to avoid this. I don't really know if hackers are doing it. I think people are putting their information online because all you need is a name, a state, and their birthday. And people go in there, here's my state of my birthday. Is just educating your clients. And unfortunately, sometimes you have to keep looking. You have to keep putting that person back in. And I know I talked to somebody who was having this issue where it was actually Oscar. It was really an issue with Oscar. Oscar was trying to play in the marketplace. The marketplace is saying it's Oscar. The other agent's like, I'm not doing this. I think it's Oscar. So, but unfortunately, until they get a smarter system, they're really not able to do that. Well, thank you, Cara. She says, I have the best laugh. So dairy farmer, please clarify using 100 versus 600. Again, go back and rewatch this and go up to about the 40-minute mark or so is where I think we talked about it. So we're walking around, time to go. Everybody, thank you so much. I appreciate it. I've got something, I started off with 66 at one point. I'm so impressed and I just thank you very much. And by the way, Judy, you said if somebody has a birthday, how long? It's usually 60 days, but I tell them you gotta give it to me within the month. Otherwise the doctors or hospitals might send you to collection. So people are usually pretty quick on getting there. All right. Thank you very much, everyone. Have a great rest of the week. I will talk to you next week. And again, if you have any ideas for October, let me know.